AS1 Disclosure of Accounting Policies. What is the meaning of accounting policy? Accounting policy is specific accounting principle and method of application of that principle in preparation and presentation of the financial statements. So, meaning of accounting policy is specific accounting principle and method of application of this principle in preparation and presentation of financial statements. Example, we are using fixed assets for running of business. Definitely we have to provide the depreciation. Providing of the depreciation is accounting principle. Then depreciation calculation can be different methods. Straight line method, written down value method, sum of the digits method, machine hour rate method. So many methods are there. Suppose our organization selected straight line method. So this is selection of method. So finally accounting policy is specific accounting principle and method of application of that principle in preparation and presentation of the financial statements. Then disclosure. What is the need for disclosing? Better and proper way of understanding it. Meaning is that we are preparing trading account, profit and loss account, cash flow statement, balance sheet. For preparation of the trading account, definitely we have to calculate the closing stock. For that we have an accounting principle according to AS number 2. We have to provide depreciation in the profit and loss account. Definitely we have to follow an accounting principle according to AS 6. We have to prepare the cash flow statement according to AS number 3. In the balance sheet we have to write fixed assets, investments and so many other assets. For fixed assets, AS 10 principle, AS 16 principle, AS 19 principle, AS 26 principle, so many principles, so many accounting standards we are using for preparation of the financial statements. Suppose I am accountant of an organization. I have adopted different accounting policies and principles in preparation of the financial statements. But my prepared financial statements will be used by bankers, state government, central government, employees, so many outside public. But what principle I have followed in preparation of this financial statements not known to the outsiders. That is the reason what policies I have followed in preparation of these financial statements shall be disclosed. Then all users of the financial statement can understand these financial statements in more reliable and proper manner, clearly understandable. That is the need for disclosing of the financial statements. How to disclose accounting policies? Where to disclose accounting policies? What to be disclosed in financial statements? Everything is contained in AS number 1, disclosure of the accounting policies. Basically, we have 5 points for disclosure. 1. All significant accounting policies shall be disclosed. All significant accounting policies shall be disclosed. First you should know what is the meaning of the significant accounting policies. Policies are basically dividing into 3 types: unimportant, important, very important. This is a local language. Technically, it is called insignificant. Significant. Fundamental accounting assumptions. According to first point, we have to disclose all significant accounting policies. All significant accounting policies shall be disclosed. Indirectly, you no need to disclose insignificant accounting policies. Why this insignificant accounting policies no need to disclose? Example, we are running one business, sales 100 crores, purchases 70 crores, rent 10 crores. We have huge amounts in transactions and events, but we have sold some old newspapers only for 200 rupees. That 200 also shall be included in profit and loss account. For that also we may have some accounting policy. That accounting policy relating to very insignificant transaction, no need to disclose. To avoid unnecessarily overload on the financial statements. Finally, you no need to disclose insignificant accounting policies. We have to disclose only all significant accounting policies. Point 2. All accounting policies shall be disclosed only at one place. Only at one place. What is the meaning of the one place? Meaning is, suppose you are preparing trading account in page number 1, profit and loss account in page number 2, cash flow statement in page number 3, balance sheet in page number 4. Some of the accounting policies may be relevant to trading account. Some of the accounting policies relevant to profit and loss account. Some of the accounting policies relevant to cash flow statement. Some of the accounting policies relevant to the balance sheet. Even though various accounting policies are relevant to the various documents contained at various places, don't disclose accounting policies at different places and don't disclose at different places in different pages. All accounting policies shall be disclosed only at one place. Whatever the accounting policies followed for trading account, whatever the accounting policies followed for the profit and loss account, whatever the accounting policies followed for the cash flow statement and balance sheet, all accounting policies shall be disclosed only at one place. Point number 3. Accounting policies are forming part of financial statements. Forming part of financial statements. What is the meaning of the forming part of the financial statements? Suppose one organization preparing financial statements means trading account, profit and loss account, cash flow statement, balance sheet, etc. For preparation of these financial statements, we have followed so many accounting policies. These accounting policies shall also be disclosed. I already told you. If anybody asks our organization financial statements, we shall not give simply trading account, profit and loss account, cash flow statement, balance sheet. But also we have to give disclosure of accounting policies. Because these accounting policies are having some impact on assets, liabilities, profits and losses. That is the reason these accounting financial statements shall be read with the disclosure of the accounting policies. That is the reason financial statements means including accounting policies. Those are also forming part of the financial statements, not separate. If fundamental accounting assumptions are followed, no need to disclose. If these are not followed, if not followed, shall be disclosed. What is the meaning of the fundamental accounting assumption? Fundamental accounting assumption also accounting policy. It is very important accounting policy, technically called fundamental accounting assumptions. These are C, A, G. C and AG. C means consistency, A accrual, G going concern. These three also accounting policies. Very important accounting policies. If these accounting policies are followed, if these accounting policies means C, A, G are followed, no need to disclose. Why? Even though these three are very important accounting policies, no need to disclose. Reason is, example, one person came to my office to meet me. At that time I am not available. Later, my assistant giving me information that, sir, somebody came to our office to meet you. He has a pant, he has a shirt, he has a shirt buttons, he has a chappals. This kind of information my assistant is giving me. You tell me, is it necessary to give such kind of information? No, not necessary at all. Why? Because I am already presuming that whoever came to my office having pant, having shirt buttons, having chappals. That is the reason my assistant no need to give that kind of information. I have already presumed that that person having dress. Similarly, in the accounting, fundamental accounting assumptions C, A, G are very important accounting policies for preparation of the financial statements. All public in the world presuming that financial statements are prepared based on the C and AG only. That is the reason we no need to disclose. If these fundamental accounting assumptions are not followed, shall be disclosed. Shall be disclosed. Reason is, somebody came without a pant, without a shirt, without a chappals anamata. Definitely my assistant shall give me such kind of the information because I am presuming that that person having the dress. But in reality, that person not having the dress. That is the reason my assistant shall give such kind of the information to me. In our accounting, all public are presuming that any organization financial statements are prepared based on the fundamental accounting assumptions CAG. But one organization not followed fundamental accounting assumptions. But public are presuming that these are followed. In reality, this organization not followed. So, shall be disclosed. We have prepared financial statements without the following of the CAG. That information must be, shall be disclosed. Point 5. If any change in accounting policy, if any change in accounting policy, normally every year we have to follow the same accounting policy. That is called consistency. Suppose on any reason any accounting policy has been changed, definitely effect of such change in the current year financial statements. Effect of change of accounting policy on current year financial statements and any probable effect on future financial statements shall also be disclosed. If any change in accounting policy, effect of such change of accounting policy on the current year financial statement shall be disclosed separately. Not only current year financial statement effect, if any probable effect on future financial statements shall also be disclosed. If possible, quantification, what is the amount of effect on financial statements of future shall also be disclosed with quantification. If it is not possible to quantify the amount, the fact shall be disclosed. We have changed the accounting policy. It has impact on the future financial statements. But how much impact, how much quantity of amount impact on the financial statements, we are not able to find. The fact shall also be disclosed. So finally we have 5 points. All significant accounting policies shall be disclosed only at one place. Policies are also forming part of financial statements. If fundamental accounting assumptions are followed, no need to disclose. If these are not followed, shall be disclosed. If any change in accounting policy, effect of such change in the current year financial statements and probable effect on future financial statements shall also be disclosed. If possible, it must be quantified. If not possible to quantify, the fact of not quantifying with reasons shall be disclosed. Stop.